The biggest secrets of financial success no one tells you about. Top 3 trading tools every successful trader has. The 2 websites you absolutely need to start trading. Hello everyone, my name is Victoria and I'm glad to see you on my YouTube channel. In this video, we're going to learn everything about market analysis tools and how they can help you make money. Let's go. What tools are required to predict trends, how to read charts like a pro trader, and how not to lose your deposit. Let's start with the technical analysis. What is technical analysis and what is it made for? This tool involves studying price charts and various technical indicators. Technical analysis is made to predict prices based on trading history. Technical analysis uses data from previous trading days, deal volumes, demand for currencies, and much more. Knowing the behavior of a price under certain conditions, a trader is able to predict how the price may change at the moment. This is exactly what technical market analysis is all about. What is the purpose of technical analysis? The main goal of this analysis is to determine the direction of a trend and possible further price changes. This helps you enter a deal at the best time and exit on time. Technical analysis uses various indicators such as RSI, Relative Strength Index, MACD, Moving Average Convergence and Divergence, and others, which helps you identify whether an asset is overbought or oversold, and also confirm the trend. What types of trends are there? Basically, technical analysis divides trends into 3 types. First, bullish trend. The price is heading up. Second, bearish trend. It's the opposite. The price is heading down. And the third, sideways trend, which is called a flat. In this case, the price stays the same. I would like to point out that the price's movement is cyclical and is more like a zigzag line. For better understanding, let's look at an example. So, a trader might use moving averages on a stock price chart. Crossover of moving averages, either short-term or long-term, might signal the beginning of a new trend. For example, if a short-term moving average crosses a long-term moving average from top to the bottom, this may be a signal to sell the asset, and vice versa. Okay, we've sorted out technical analysis, but what is the fundamental analysis for? Fundamental market analysis gives prognosis of price in foreign exchange markets. The essence of this analysis is studying the root of a price change. This type of analysis considers events that affect a country's currency. Sure enough, it is impossible to address every event that is happening in the world. The market pays attention to the key events in the politics and the economy. New technologies have made life so much easier for the traders. They don't have to sit for hours researching and analyzing foreign exchange markets because they get all the necessary information they need from spaces like TradingView. Now, what are the key events? Fundamental events that affect the market are predictable and unpredictable events. Unpredictable events are, for example, sudden changes in the government, natural disasters, and other unexpected circumstances. It is impossible to foresee these situations. Make sense? Okay. Predictable events include released news and statistical data. In an anticipation of news, market participants plan their actions in advance, and after the broadcast, they act. Forecasted news include macroeconomics data of countries. What news should we take into account? News is divided into classes depending on how long it affects the market. There are short-term factors. This includes news that can briefly influence the market exchange rate. With their help, deals are made quickly. Long-term news has an impact on the market even up to 7 years. Long-term news has an impact on the market even up to several years. Such news includes the state of economy, the level of the US government debt, the unemployment rate, etc. Using such factors, traders enter long-term deals. A trader's best friend is an economic calendar. This is where you get the most important news that impacts the foreign exchange market. Please note that the importance of news is marked with an asterisk symbol. 1 means the news is not particularly important. 2 means important news. and 3 represents the news that is critical for the market. Fundamental analysis is quite complex, and its complexity lies in the fact that each trader regards events in his own unique way. This analysis is loosely based on market psychology. To grasp the essence and method of working using this analysis, firstly you need to understand the theoretical foundations. After you get to the bottom of the fundamental market analysis basics, you will be able to understand what events affect the market and how. Go ahead and open up a demo account, test the newfound knowledge, and monitor the changes. All the useful links you will find in the description of this video. But before we move on to practice, I want you to go to my Telegram channel, because there you will find all the answers to frequently asked questions, information signals, and lots of other useful information. Check the link in the description down below. So, okay, let's make some deals using the knowledge we now have of technical and fundamental analysis. Let's have a look at how that works. Okay, so right now we mostly have the OTC pairs available. That's okay, because we're only looking at the algorithm of analysis and how does a trader make decision based on that. Okay. Let's have a look at the example of this currency pair. AUD, CAD. I've opened up 2 indicators for analysis, MACD and RSI. Let's look at this moment here. You can clearly see the uptrend. That is the green color. So the MACD graph goes higher. This tells us that we could call. Also, we can see the green and the red lines crossing. There. Right here. You can clearly see them. And you can also clearly see the beginning of an uptrend. It's a great signal. So some particular moments here, these two. Okay, let's look at another currency pair. Again, we can see a very good example of the MACD graph going up above 0. And there's the green line crossing from bottom to top. So we spot a trend. So we can open a currency pair and receive profit. Right now, we can see a downtrend. Just a sec. So we can see a downtrend. We can see the green line cross the red line, and an MACD graph going below 0 point. Here we are able to put. Let's try for 2 minutes. pay attention, we got the negative deal, but if we look closely, we actually entered too early. We should have held on to the downtrend being more stable, and we could be sure to put. And unfortunately, the trend just wasn't stable enough. And you can clearly see the sideways trend, which we call flat. So the sideways trend is not the perfect time to enter, which you can now clearly tell. Okay, let's find another example. Well, this currency pair, CADGPI, as an example, we can see a downtrend. It's also a bit weak, but we'll try since we have already started a deal of 2 minutes. But we can see the graph going down, the green line crossing the red from top to bottom. Another indicator, RSI, is leaning towards support. Wonderful. Our deal has made a profit. We can see it's $76. As you can tell, the analysis was 100% accurate. Plus, we checked the deal with the RSI indicator, which we also talked about previously. Now let's have a look at another deal. I'm opening up a deal of currency pair Euro GBP. You can see that it's a downtrend. We can see MACD indicator is showing the negative zone. And we can also see line crossing and going down. There was a sideways movement, but now they are both at the bottom. This is more important. The RSI indicator also confirms the dynamic. Great, our deal has made profit. As you could probably tell, I have increased the sum to $200 in order to close the deal that had a negative balance before. Let's make another deal. It's a currency pair Euro HUF. I'm going to show you the zone that we're working with. It's an obvious uptrend. It's both of the indicators are confirming this. We can see the very strong uptrend. Great, the deal has made a profit. So, out of 4 deals, 3 are in surplus. We have made quite a big profit. Some $322. All this due to the technical and fundamental analysis. Let's summarize today's video. Both tools have their advantages and disadvantages, and many traders combine the two of them to make decisions on financial markets. My advice to you is to make sure to try both these tools and evaluate them for yourself so that you could decide what is the best way for you to use them. Thank you for watching this video to the very end. Don't forget to subscribe to my channel, like this video, and I'll see you in the next one. Bye!